Pain in the markets is something every trader tries to avoid, yet it becomes the very force that shapes the ones who survive this business. I've watched traders run from it, bury it, deny it, and pretend that if they ignore it long enough, it will lose power. But in trading, the pain you avoid becomes the loss that hunts you. And the loss you confront becomes the wisdom that feeds your next profit. So if you're listening to this, let me tell you plainly, you're not in a battle against charts or indicators. You're in a battle against your own reactions to loss. And if you can win that battle, the market will finally reveal its structure to you. Most traders think losses are their enemy. They feel insulted by every losing trade. They take it personally. But trading is the only profession where doing everything right can still lead to a loss, and doing everything wrong can accidentally result in a profit. That contradiction breaks most people. They want fairness. They want an emotional reward system. They want the chart to pat them on the back for good behavior. But the market isn't a parent. It's a mirror. And it reflects back the emotional state of the trader more clearly than their own conscience ever could. When I talk about losses, I talk about them with the familiarity of an old partner. I've taken them. I've resented them. I've feared them. And at times, I've ignored them until they grew fangs and tore through accounts that took months to build. The market always teaches brutally, if necessary, what traders refuse to learn gently. That's why understanding loss psychology is one of the most profitable studies a trader can do. Because once you've learned not to panic in the dark, you become the kind of trader who can see clearly when everyone else is trembling. Let me take you back to one principle that has never changed. Losses are the cost of doing business. You can fight that truth all you want, but every fight against reality ends the same way. A trader who expects perfection will panic the moment imperfection shows up. They'll widen stops. They'll average down. They'll chase reversals that never come. They'll open trades simply because the silence feels uncomfortable. They'll do everything except the one thing discipline demands. Accept the loss, exit with clarity, and position themselves to act again. I learned early that the pain of a small loss is nothing compared to the pain of being wrong and refusing to admit it. That stubbornness, that emotional need to be right, has buried more traders than bad strategies ever have. A losing trade never destroys an account. A refusing to close it trade always does. When traders talk about blowing accounts, they rarely describe a single catastrophic decision. It's usually a chain of small emotional reactions that stacked up over hours or days, each one fueled by the simple refusal to feel pain for 5 seconds. There's a psychological shift that separates consistent winners from everyone else. The shift happens the moment a trader stops thinking, "I hope this loss turns around," and starts thinking, "How quickly can I neutralize this mistake before it grows?" Winning traders don't fear losses. They fear ignoring them. They fear the loss of discipline far more than the loss of capital, because discipline is what replaces the panic mechanism that destroys traders from the inside out. When I think about the most profitable periods of my career, they weren't marked by brilliant predictions or flashy wins. They were marked by consistency in handling losses. The ability to cut off a losing trade without negotiating with myself was worth more than any chart pattern. Predicting the market was never the real task. Managing my own impulses was. There's no strategy, no moving average, no Fibonacci level, no trend line that can compensate for a trader who is afraid to lose. Loss aversion destroys far more potential than bad entries. I've seen traders freeze in front of obvious setups simply because they remember the pain of the last loss. That fear paralyzes them. They start hesitating. They start second-guessing. They want to trade without discomfort. They want guarantees. They want certainty. But certainty is something the market doesn't sell. The only thing the market sells is opportunity, and those opportunities are only visible to traders who aren't blinded by fear. Most traders misunderstand the purpose of risk management. They think it's about avoiding losses altogether. But in truth, risk management is about creating a structure where losses don't alter your mental state. A trader who risks too much becomes emotionally unstable. They might not admit it out loud, but their pulse gives them away. Their breathing shifts. Their judgment narrows. Their world shrinks down to the single red candle moving against them. And in that state, even the wisest trader loses access to reason. The first step in mastering loss psychology is accepting that losing trades are part of your identity as a trader. They are proof that you are participating. They are proof that you are acting. They are proof that you are learning. You cannot become experienced without losing, and you cannot gain wisdom without pain. Once you internalize that, losses stop being threats. They become information. They become signals. They become small tolls you pay to stay in the game. The second step is building a philosophy for loss. You cannot merely plan to cut losses quickly. That's the language of amateurs. Discipline must be built into your process so deeply that it becomes instinct. You must know the exact amount you're willing to risk before you click buy. You must know the invalidation point of your trade. You must know the emotional consequences of breaking your rules. I found that when I followed my rules strictly, losses stopped feeling painful. They became expected, controlled, even welcomed as the cost of reaching the next high probability move. The third step is learning the difference between pain that helps and pain that harms. Helpful pain is the sting of a loss that reinforces discipline. Harmful pain is the agony of a loss that spiraled out of your control because you lacked discipline. Traders who repeatedly experience harmful pain often tell themselves that the market is unfair. But the truth is simpler. They are refusing to develop the emotional fortitude required to manage uncertainty. Whenever I look back on my mistakes, my real mistakes, not the small losing trades, I notice something clear. I stopped listening to the market and started listening to my emotions. I let greed speak louder than logic. I let fear speak louder than strategy. I let hope speak louder than facts. And every time I did that, the market punished me. The punishment wasn't personal. It was mechanical. The market doesn't care who you are. The market only cares how you behave. There's a strange paradox in trading. The less you care about individual outcomes, the better your outcomes become. As long as you treat each trade like a test of your identity, you will break. But when you treat each trade like one of thousands, suddenly the weight disappears. Your perspective widens. You begin to see the rhythm of the market instead of the threat of it. If you talk to traders who've survived for decades, they all say the same thing. The greatest edge is emotional stability. Anyone can learn technical analysis. Anyone can understand price action. But the ability to keep your composure after 3 losing trades in a row, that's rare. The ability to take the next valid setup with the same confidence after being punched by the last one, that's discipline. The ability to lose gracefully, without self-criticism or panic, that's maturity. Let me give you a truth that most traders don't want to hear. Your biggest losses didn't come from bad strategy. They came from believing you could outweight the market. They came from telling yourself the market had to reverse. They came from the refusal to surrender early. They came from the emotional ego that couldn't accept defeat. That ego is your worst trading partner. It will encourage you when you should stop. It will excite you when you should wait. And it will urge you to gamble when you should protect your capital like a fortress. Pain is an instructor, and it teaches without mercy. But if you listen to it early, you avoid its harshest lessons. There's no shame in being wrong. The market wants you to think there is, but that's an illusion. Being wrong is how you gather data. Staying wrong is how you destroy accounts. That's why mastering loss psychology is more important than mastering entries, exits, or indicators. It's the foundation that all profitable trading rests upon. If you're wondering how to turn trading pain into profit, the answer is simple. Let the pain teach you, not paralyze you. Pain shows you where your discipline is weak. Pain reveals your emotional blind spots. Pain points out the areas you refuse to confront. Every moment you feel discomfort is a moment that reveals the next step in your evolution. Use your losses as mirrors. Examine your behavior with honesty. Did the loss come from the market or from your emotions? Was the trade invalidated logically, or were you trying to force it? Were you trading a chart, or were you trading your memory of a previous win? The more accurately you answer those questions, the more profitable your future becomes. There is something liberating in mastering loss. You stop fearing the market. You stop chasing setups. You stop over-leveraging. You stop reacting impulsively. Instead, you observe. You act when necessary. You stand aside when the conditions aren't favorable. Trading becomes a profession, not a game. You are no longer desperate to win, and therefore you begin winning more. Remember this: the strongest traders are not the ones who avoid loss, but the ones who absorb it without losing clarity. That's the real skill. That's the art of survival. That's the mindset that separates the long-term trader from the temporary gambler. When you learn to lose correctly, you finally give yourself permission to win. And once you master your own psychology, the market stops feeling like an enemy and starts looking like a landscape of opportunity, neutral, predictable, structured, and full of potential for those who know how to navigate it. Every disciplined loss brings you closer to profitability. Every emotional loss distances you from it. The choice between the two isn't made by your strategy, it's made by your mindset. So, the next time a loss appears, don't fear it. Study it, respect it, learn from it. Because the trader who can endure small pain will always avoid great pain, and the one who avoids great pain will always live to capture the next trend, the next setup, the next move that makes the months of struggle worthwhile. Losses are not the end of your trading journey. They are the fire that shapes the steel inside you. And if you allow them to refine you instead of define you, you'll become the kind of trader who not only survives but thrives quietly, consistently, and confidently.